report where we did see the Cabinet Secretary as well as the Principal Secretary putting up a spirited defense over the imports of maize from Mexico. We now want to bring in an analytical view to this term that has been now used as unganomics. Let me now bring in Johnson Derry, analyst with ABC Capital. Many thanks for joining us.
Thank you for having me.
So Derry, there's been a lot of talk around what the government has done in this week, and that is to subsidize maize prices from 150 to 90 shillings.
Yeah.
And all this is coming ahead of elections, of course.
Yeah.
Over and above that, there is the issue of how sustainable is this?
Well, from a policy perspective, obviously, we all know this is a supply issue. Mm-hmm. And obviously, the solution should have been directed to addressing supply. Obviously, pricing is affected by supply. Mm-hmm. I think this was obviously done to manage the optics of the situation, mm-hmm. because we know it had become, a point of
revolution.
Exactly. So if they were to address it early, mm-hmm. Then ideally they ought to have allowed for imports from the get-go, because they knew for a fact that supply was not going to be enough to support consumption locally.
All right.
So if the subsidy manages the situation a bit, but it also creates opportunities for arbitrage. And I won't be surprised if you see people start buying here locally and sending them somewhere where they can get better prices, mm-hmm. As a result of the price differentials. So the economics, that's where the breakdown is.
All right.
Yeah.
And looking at the numbers, I was just interrogating the numbers. We're looking at the imports are 60,000 metric tons. This translates to about 990,000 bags of maize. And they're saying this will take us for 1 month, after which they'll be importing another 2.1 come July. And then the next tranche is 2.6 million bags. And of course, we're also heading to the harvest season. What's going to happen?
Ideally, if you ask me, the whole arrangement that we have is the weaknesses have been exposed, and ideally, if you ask me, then there ought to be a different approach, because every so often this will come up. I mean, no government can guarantee the production that will satisfy everybody at the mm-hmm. appropriate prices. Because even one thing that we know historically is, and the World Bank keeps repeating this over and over, is that we buy our cereals at pretty much higher prices than even the world market. Sure. So what does that mean for our competitiveness as an economy? So what they ought to be doing is I want to take you back a bit back. Huh?
Sure.
If you go back to the production process, mm-hmm. there's still more subsidies there. There's still free fertilizer, free seeds. Mm-hmm. I mean, basically, we're paying these guys to farm.
Yeah.
That shouldn't be the arrangement. Mm-hmm. No economy can run like that. Ideally, what we should be doing is allow market forces to apply, mm-hmm. and fully liberalize. In any case, we know we are not self-sufficient, not in maize, not in rice, not in
sugar, wheat.
Yeah.
Yeah.
So when you restrict supply in the way we do with mm-hmm. quotas and whatnot, it creates opportunities for rent. And unscrupulous politicians will mm-hmm. obviously use that opportunity to.
So, are you saying there are underhand dealings in this importation?
Of course, I didn't say of this particular one,
right.
But it most certainly happens from time to time. Mm-hmm. So the ideal thing is just fully liberalize it and let those who are able to do it best, mm-hmm. those who are able to manage the supply chains best, whether it's the millers, whether it's the individual businessmen, yeah. and let them specialize in that. And if we really want to perform in agriculture, then we should be talking about producing stuff that we can do at a very competitive price. Sure. We're still good at tea, we're still good at coffee. and we do very well, I think, at Sisal. There are many other, and also unexplored produce like mangoes and horticulture and the fruit side, avocados, which have got quite a bit of demand. So that's why we should be focusing our resources on. We should be paying farmers to farm.
And Nderi, just before I let you go, what should be the conversation that we should be having as a country over and above addressing the knee-jerk reactions we are seeing to a crisis that would create some perceptions on our sitting government? What needs to be the conversation really moving forward?
I think the overall story here is how we manage our resources, because our resources must be used to generate more. But when you're pumping in resources into industries, into companies, into sectors, and they're generating less output than the resources that go in, then we should be asking tough questions of ourselves. And this should be run across board, whether it's in communications, whether it's in agriculture, whether it's in industry. I mean, we should be a little bit more conscious of the taxpayers' resources, because you can't keep asking the taxpayer to pay more to finance production that is of less value than what the taxpayer is giving you.
All right. And Nderi, it would be unfair for me to leave this conversation without asking you, looking at the maize prices, we have some interesting numbers that will be showing on the screen once more. And we've seen right now the government is saying they are going to buy maize from whoever wants to sell at 3,600. Ideally, a bag would do about in the range of 2,500, 2,800. Then there's this astronomical shoot in the number.
I mean, obviously, if you're going to buy maize bags at above average, and I mean, when you compare the global prices, and then how then can you guarantee prices, stable prices downstream? It's just illogical. At some point, the government would want to make you believe that yes, it's the one absorbing the cost. No, it's the taxpayer who's absorbing the cost. So what you're not paying for at the till, you're paying for the tax at tax level, and sooner or later it's gonna tell.
All right. Yeah. Many thanks there, Johnson Nderi, talking to us over this issue around the politics of maize and what other Kenyans have called as unganomics. We'll continue to stay on top of this conversation as we delve deeper into what really happened and what does this mean to Kenya's economy, which is still food insufficient. Many thanks, Nderi.
It's a pleasure.
Well, let's now move on to another story now, and that is in the banking sector. And Cooperative Bank of Kenya has posted a net profit of 3.2 billion shillings in the Q1 results. The bank did post 3.4 billion last quarter. This represents a 6% drop in the net profits of the lender. The lender moving forward has indicated that it will be looking to grow deposits through its various model. The firm also did cut down on operational costs under the Soaring Eagle transformation program, which continues to see the bank stay on top of the game when it comes to cost containment. Well, moving away from that, let's still keep it with matters to do with results. And Kenya Pipeline Company has posted an 8.4 billion shilling after-tax profit in its 2016 results. The pipeline company has attributed this to a growth in the revenues coming from fuel supply across the country. Kenya Pipeline has been looking forward to becoming the premier oil and gas company in the region, and this comes on the back of increased investments in a number of key areas to boost connectivity as well as improve the level of delivery of services across its various platforms in the country and across the region. Well, Kenya Pipeline further did announce that it will be scaling up the oil pipeline project, which has been in the works for the last few months. Well, let's talk about new developments in the publishing industry, and Longhorn Kenya is set to have a new director in the board after the name was announced in the latest market actions from the Nairobi Securities Exchange. Longhorn Kenya has been looking towards actually expanding its footprint within the region in the publishing sector. This comes as the publishing house has looked forward towards boosting revenues across its various platforms. Well, that is the new face that has been appointed at Longhorn Kenya, and that is one of the biggest developments from that end. Well, let's now move on to another story, and that is Gulf Africa. And Gulf African Bank, the first fully Sharia compliant bank in Kenya, has moved to bump up its services with the first Sharia compliant insurance premium financing in the country. Regular insurance premium financing provides businesses and individuals with short-term loans to cover costs to immediate insurance premiums, spreading repayment over an agreed period of time. Gulf Africa introduces Sharia-compliant IPF, which enables the bank to enter into an agreement with the insurer and the insured, where the bank will pay the full insurance premium of the insured immediately while operating under the Tariq model, which allows clients to raise money quickly and easily with non-interest benefits. Speaking during the launch of the event, Gulf Africa Bank's Managing Director, Abdallah Abdul Khalik, says that the insurance solution offers a great deal of flexibility in both interest payments and offsetting of the principal. Well, we now going to get into matters to do with insurance, and I'm now joined by the Managing Director for Madison Insurance. Many thanks for joining us.
Thanks, Abdi, for having me.
Well, just picking off from that report where we're seeing a number of banks tapping into insurance companies, from where you sit, what sort of trends should we expect moving forward?
I think the insurance sector obviously is at very crucial point at the moment. We've seen several changes. We've seen many foreigners come in, which tells you a lot is likely to happen in the short run. So we expect changes in terms of the growth that you see in the sector, the aggressiveness of players as capital increases in the sector, and also we are expecting changes in the regulatory environment. Indeed, some of those changes have already come into place. We've seen risk-based capital regulation, which is a good thing and an important thing, and I think it follows in the footsteps of the banking sector. The other aspect that we know obviously is behind there is that we know we are likely to have a combined financial regulatory authority, which will combine insurance, retirement benefit, and proper circles. So on the regulatory space, quite a bit of changes. On the ground, we expect the companies, and we see good prospects for the sector. Right. We expect significant growth going forward, and that's why you see such new entrants in the sector.
And of course, insurance companies have been struggling to release products that are tailored to the market. And we're talking about penetration of about 3% compared to our peers such as South Africa, which are at least 16%. And what has been the teething problem for insurance companies to break into the markets?
I think it's three issues principally. One of them has been the levels of income of Kenyans. That is changing recently. We've seen levels of income increase, but we've got to admit that in the past, incomes were a bit low. And obviously, people would take insurance as one of their last considerations. The other thing has been the publicity or the knowledge of the product by the buyers. And that is because the insurers also have not gone out there and informed the buyers of the product maybe as much as the banks have done. And I think the recent requirement for capital increments, the entrance of big players is likely to help that aspect. We have stronger players who can go out there and tell Kenyans what the insurance can offer. The other aspect, obviously, is that players themselves were not fully prepared for it, given their size and all those things, and that's why we are saying bigger, better capitalized players will bring a difference.
Interesting. And perhaps, Joshua, now that you've brought up the fact that players are becoming more flexible and doing more research when it comes to rolling out products. There's been a huge challenge in financing higher education in the country. A number of students do qualify to go to university, be it at the parallel program or the usual program that is financed through the Higher Education Loans Board. And a number of products are coming into the market. We know that Madison did release a Uniplan. Perhaps what informed this? Is there a gap in financing higher education?
Yeah, indeed there is. If you look, we have well over 500,000 students in our universities, not even higher education, just universities. If you look at help, maybe it's financing only about half of that, about 240 to 250,000, and not even fully. So we've seen situations where majority of the students at our universities are unable to pay their fee in time. Indeed, it's only 1 out of 3, according to the research we did. It's about 1 out of 3 students who are able to pay their fees in time and are comfortable. We have 2/3 who are unable to pay their fees in time. And that's why Madison came up with the product that you've mentioned, Uniplan. It's a product targeted for financing higher education, university and other forms of higher education. It combines an insurance element in it and an investment element in it. And its purpose is to ensure that parents can plan well in time what their child will do and that they are able to finance. Indeed, that product enables parents to say with their kid, well, before the kid joins university, that I would want to do this course. It's going to cost me X amount of money, and that with that amount of money, then I can save slowly over time towards the amount. The other beauty with it, obviously, is there is an insurance element in it. Should the unforeseen happen, then Madison would take over and pay the fee for the student.
All right.
Yes.
And generally, how is the uptake of education-based products? I know a lot of middle class are taking the long-term products which cover for university and high school, but there's little interest in pre-high school, actually, that being primary level.
You're right, and indeed the bulk of the insurance products that we have in the market are secondary school products. Indeed, even at the university level, probably the product we've just spoken about is the first one. At pre-secondary school levels, most of the parents have not taken particular products. But also I think it's been informed in the past by the fact that many parents have felt that they can afford primary education. That is quickly changing, and we are seeing primary education probably becoming even more expensive than university education in some of the primary schools. And what many insurance companies have done, including ourselves, is to offer flexibility in terms of the products that we offer, so that they are able to pay or they are able to mature in a piecemeal manner over the education life of the children. So they can start paying when the kid is in standard 5, 7, pay all the way to high school.
All right.
Yeah.
And I'd like to get your closing thoughts on what sort of trends should we expect now that we are going into an election cycle. How is the outlook for insurance in the market right now?
I guess, insurance is about risk. Politics brings a lot of risks. So if anything, I would really encourage Kenyans to think about insurance at this point. It is now that insurance is needed more than ever before, because it helps us manage risk. And if you look at the insurance industry in Kenya, we've become more flexible.
All right.
We offer political violence protection, so that if your house is burnt, your car is burnt, then the insurance is able to pay for you.
But people always would say it takes so long for the claim to be effected.
I think that's in the past, and that has been part of the reason why you asked the first question, why was the uptake not good? I think insurance has changed significantly, even the regulation. In fact, we are moving towards a regulation that says we should pay any claim within 30 days. Mm-hmm. And generally speaking, even without the regulation, most of the insurers are nowadays...
But is it really feasible, knowing that we have a consumer market that pays in installments?
Yeah, obviously, for your claim to be paid, you'd have to have paid the premium. It is possible, and it's happening.
Okay.
Yes.
Many thanks. Joshua Gitonga.
Thank you very much.
Managing Director for Madison Insurance, just talking to us on some of the developments in the insurance sector, which is yet to be fully capturing a big chunk of Kenyans. We do know that currently just about 3% of the population are having insurance products, which is still falling far too low beyond the global requirements. Well, we're going to take a quick commercial break. When we come back, we'll be having transformers, and we'll be focusing on global investors and why their appetite to invest in Kenya is growing by the day.